Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 27th of February. Sterling tumbles on Brexit-related reports. The British pound tumbled during the Asian morning Monday, following media reports over the weekend regarding Brexit and immigration control, as well as the prospect of a second Scottish independence referendum. Firstly, according to the Telegraph, Prime Minister May is expected to announce that EU citizens who travel to Britain after the triggering of Article 15 in March will no longer have the automatic right to stay in the UK permanently. This is a significant development because prior to this, the UK was expected to keep the free movement of people principle intact until it exited the EU in roughly 2 years. In our view, the fact that Prime Minister May wants to take full control of Britain's borders as soon as when the exit negotiations begin confirms that the government's top priority is immigration and not access to the single market, and enhances our view that we may be headed for a hard Brexit. The other story over the weekend that may have weighed further on sterling was that the Scottish National Party raised the issue of a second Scottish independence referendum at a private meeting with May's administration last week. Although this prospect is not new, the report added that according to government sources, May could agree to a new Scottish vote, but on condition it is held after the UK departs from the EU. Coming on top of Q4 GDP data showing falling business investment and a Bank of England that appears to be in absolutely no rush to raise interest rates, these fresh signals of a hard Brexit and the risk of another Scottish referendum amplify our view that the broader outlook for the pound remains negative. What's more, given the uncertainty surrounding fiscal policy in the US, we would avoid exploiting pound weakness through cable. Instead, our favorite proxy for any potential sterling softness in the foreseeable future is sterling yen, considering that the looming political risks in Eurozone could strengthen the yen due to its safe haven status. Sterling yen traded lower on Friday to break below the support now turned into resistance territory of 140, and the upside support line drawn from the low of the 16th of January. The rate slid further during the Asian morning Monday before finding fresh buy orders marginally above 138.90 and subsequently rebounding somewhat. The fact that the rate has exited the triangle formation to the downside confirms that the short-term outlook of the pair is negative. As such, even though the latest rebound may continue for a while and perhaps test the 140 level as a resistance, we would expect the bears to take control again at some point and push the price lower for another test at 138.90. As for today's highlights, during the European day, the data calendar is very light. The only noteworthy indicator we get is Eurozone's final consumer confidence index for February. In the US, durable goods orders for January are due to be released. The forecast is for the headline rate to have rebounded from previously, while the core figure is expected to have risen for the 5th consecutive month. Solid durable goods orders could bring the dollar under renewed buying interest. As for the rest of the week, on Tuesday, the highlight of the day will be US President Trump's address to a joint session of Congress. Following Trump's recent pledge that he is going to announce a phenomenal plan on tax reform within the next weeks, market participants will be on the edge of their seats for any details regarding the new administration's fiscal plans. As for the US data, we get the second estimate of Q4 GDP. On Wednesday, the Bank of Canada rate decision will take center stage. The forecast is for the bank to remain on hold. In such a case, market focus will quickly turn to the statement accompanying the decision for any forward guidance, as there is no press conference by Governor Polos. Given the progress in economic data since the latest Bank of Canada meeting, the tone of the statement could remain neutral overall. As for the economic data, we get Australia's GDP for Q4, Germany's preliminary CPI for February, and the UK's manufacturing PMI for the same month. What's more, we get personal income and personal spending data for January from the US, as well as the core PCE price index for that month. On Thursday, Eurozone's preliminary CPI for February and Canada's GDP data for Q4 are coming out. On Friday, during the Asian morning, we get Japan's CPI figures for January. During the rest of the day, we get the UK services PMI for February, and from the US, the ISM non-manufacturing PMI for the same month. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.